story क्या है? There's a chemical called phenol, had a demand in 2017-18 of about 2 lakh tons per annum. Now, why is that a solvable problem? Solvable because phenol is made from that. They said we'll set up a plant in Dahej for phenol, contributed to a massive jump from FY18 to FY20. If you want to invest at this stage, what you need to understand is that the probability of winning, or another decision you can take at this point in time is say that, hey, I'll invest a little bit of money at this point, and as my conviction grows larger, now a majority of these DASDA plants also came under the scanner, and what they're trading at that time, chemical companies were trading at 25-30 times. Hello and welcome to Rupeeting. My name is Sagar Lele and I'm the founder of Rupeeting. Today we're going to talk about the investment framework that we use at Rupeeting in order to select stocks and manage and maintain portfolios. Everybody has a framework and so do we. Ours is called the SEVT framework. It stands for stories, earnings, valuation, and triggers. I'm going to get into each of these, and while this sounds boring, trust me, it's not, because the focal point of the entire framework is the story. And that's what makes every single investment of ours very interesting. It makes all of our analysts and portfolio managers and investment advisors come on the same page in terms of understanding stocks, looking at companies, analyzing them, and also maintaining portfolios over a longer duration. So without further ado, let's dig into it and figure with an example how we operate the framework. Without an example, obviously, it's going to turn out to be very theoretical and boring. So we're going to take the example of Deepak Nitrate, a stock that we've been looking at and tracking since a very long time. And that has been a successful story, at least in my past career, before I started Rupeeting. So that's been one of my crown jewels in terms of my career. And I think that's a great start for explaining how we operate this framework and how we implement it on a daily basis. So how did this framework come into place? Many people get very confused about the start point when it comes to analyzing stocks. Do we put screener on and look at the financials? Do we download an annual report? Do we put on CNBC and figure out what's hot? Do we call a friend who's good at the markets and just ask him where to invest? We think that this is all very chaotic. Instead, the start point should be the S of our framework, which is understanding the story of the stock. What is the story behind any company? Does that make for a good investment thesis? And it will also help you analyze over a period of time whether the story is functioning as per your estimates or not. Take a call accordingly in terms of whether you want to stick around, double down on your investment, or exit it. Right? So understanding the story of any business is very important. This is also the most interesting part of our investment framework, because this is where things get real, things are more relatable, things are less jargon and more about understanding the business. How did this framework come about? Back in the sell side days where I was an analyst, if we had any initiating coverage, we'd called fund managers and try to pitch the stock to them. The first question would be, story kya hai? So that's a very basic fundamental question that needs to be answered, and everything that is beyond which leads to chaos usually falls into place if you understand the story of the business. So we'll come back to our example, Deepak Nitrate, and take you through parts in terms of how to look at the story. Right now, in every story, there is a very typical flow. There is a main character. In this, the main character, of course, is Deepak Nitrate. Deepak Nitrate used to be a major chemical manufacturer in India. Major revenue used to come from two chemicals. These were base chemicals called sodium nitrite, hence the name Deepak Nitrate, and this other one called toluene. And they had some performance chemicals or specialty chemicals as well, which were primarily OBA and DASDA. Now, these two chemicals are brightening agents. They are what make paper, detergent, these things bright, right? So, very critical component, critical chemical, and this company used to, they actually acquired a company which used to make this, and they assimilated into their operations, and this was an offering that Deepak Nitrate also had. Now, coming to what is the problem, right? Every story has a hero. It also has a problem that the hero eventually solves. The problem that Deepak Nitrate saw in the Indian market was that there's a chemical called phenol. it's pretty popular. You would have heard of phenol at some point in time. It has a very distinct, nice smell, comes from the benzene chemistry. So the phenol market in India, which has both consumer as well as industrial applications, had a demand in 2017-18 of about 2 lakh tons per annum, right? Now, the problem was that Indian domestically manufactured phenol was supplying only about or fulfilling about 10 to 20% of that total demand. So say 20 to 40,000 tons per annum of phenol was sourced from the country. The rest of it was all imported, mostly from China. Now, why is that a solvable problem? Solvable because phenol is made from two things, benzene and propylene. Both of these are petrochemicals which are manufactured in India. So effectively what India was doing was, it was making petroleum products. It was hence making the derivative of it called propylene and benzene as well. However, it was exporting most of this. It was probably going to China and some other countries. China would process it, make phenol. Acetone is a byproduct of phenol. Acetone is what removes nail paint, right? So again, distinct smell. Whenever you make phenol, acetone comes as a byproduct in the manufacturing process. So China would make most of the phenol and acetone and send it back to India. So what India is doing is, it is making the raw material, sending it somewhere else, incurring a cost for it, buying it for more expensive rates, and then selling it within India. So Deepak Nitrate, our main character, our MVP, saw a story there, a problem there, and they said, let's solve it. Right. So how do they solve it? Now, this heroic feat that Deepak Nitrate pulled off, which seemed rather impossible or unbelievable in the beginning, is that they said, we'll set up a plant in Dahej for phenol of a total capacity of 20,000 million tons. So the entire capacity that India needed at that time, they said, let's just set up a plant. 90% is actually imported. This is called import substitution. So rather than importing, we set up capacity within and just capture the entire market, because you have a cost advantage now. You don't have to really transport the entire thing from somewhere else and incur those costs and duties and all of that. So you just manufacture, substitute the entire import, and you're done. Now, why was this unbelievable? This was unbelievable for two reasons. One of them, that Deepak Nitrate was being pretty ambitious for its size. So if you look at the PAT of the profit after tax of Deepak Nitrate back in FY18, it was about 80 crores. And they were incurring a capex of 1400 crores on the new plant. So look at the amount of money they're spending on this entire plant. So it's a big bet, right? Their total revenue in FY18, in fact, was 1600 crores. So they're taking a massive bet. And markets usually get very skeptical of companies taking a very large bite, right? You don't want to end up in a situation where you're biting on more than you can chew on. And this was one of the situations where it met with a lot of, the initial reaction was, of course, come on, you got to be kidding. Or the initial reaction was that you're going to drown in debt because you're taking on too much. The plan for Deepak Nitrate was that 60-40 would be the ratio of debt to equity in terms of how they would get money for the plant. Sorry, I don't know why I complicated that. So how they would get money for the plant, 60-40 debt equity, and the plant would be operational. Now, Deepak Nitrate, being in the industry, saw the story, right? They could just put up the plant, a couple of years, capacity utilization goes up, ramps up completely, they capture the entire market, and you've got a good payback. But obviously the markets need to figure whether this story is believable or not, and whether it makes for a good investment or not. The solution, great. However, what is the outcome? And that defines whether at the end of it, your story is going to turn into a positive outcome, which is a wealth creator, or a negative outcome where you're going to probably lose money. And this being a big investment, you will lose a significant amount of money yourself because you are betting on something which is impossible to pull off. So very binary outcomes from this. However, this is where the rest of our framework comes in, right? Story to tha ki Deepak Nitrate sees an opportunity, but will they be able to do it or not? Now, this is one stage where you can invest. If you want to invest at this stage, what you need to understand is that the probability of winning is less because the evidence of victory is very low. You're at the very start of the story. The company itself has just announced its plans and not yet made moves into executing. And hence, the probability of you coming out as a victor would be pretty low at this point. However, you got to remember that this is also a point in time where the market is also not believing it. The market is also not appreciating the stock. And the story has not played out in terms of it reflecting in financial performance as well. So very initial stages. So the amount of money you can also make at this point of time, if you take the bet, is mad, right? So high probability of failure, and hence the payoff is also super high. This is where it can get exciting, but as a noob investor or as a beginner investor or even as a conservative investor, I don't think this would be the right stage to invest. You need some evidence in order to put in big money. Or another decision you can take at this point in time is say that, hey, I'll invest a little bit of money at this point, and as my conviction grows larger, as the story plays out in reality, is when I'll pump in more money, right? So now we'll come to strategizing about the investment later, but let's come back to the framework, because only stories don't do much. While there is a story, it needs to also play out in a manner that two things happen. You get supernormal earnings growth, number one. And number two, there is a valuation re-rating that happens. Both of these, when combined, give you phenomenal returns. And that is what you need to seek when you're looking at any story and analyzing further in terms of what the story does in terms of outcomes of wealth creation. Very simply put, any stock price in the most simplistic form is a function of two things, right? It is the function of EPS and P. So what we need to figure is how the EPS for this stock moves in tandem or because of this story, and what does the valuation look like after the story has played out, right? The combination of these two will result in a future price which is different from the current price, and that's exactly what you're investing for. So now that we've understood the story, let's give the story some legitimacy by looking at the earnings of Deepak Nitrate, right? Here, luckily, since this story has already played out, we have the benefit of hindsight, we have the benefit of retrospection, and hence we can see how the numbers played out. Of course, investing at that point in time is about forecasting these numbers. We'll come to that in a bit, but let's just check out how the story played out. So Deepak Nitrate put in the plant in FY18 for phenol. Now look at the revenue growth for FY19 and FY20. From FY18, 1,650 crores to FY20, of 4,230 crores. This is the kind of jump that Deepak Nitrate has seen when it comes to revenue. You look at the operating profit has jumped from 204 crore in FY18 all the way to 1,035 crore in FY20. Similarly, the profit after tax from 80 crores to 611 crores. So this is the kind of phenomenal jump you've seen in earnings. Right? Every story has to be supported by numbers. If the numbers do not come in, if you do not see the reflection of that story in revenue growth, in margin expansion, in profitability expansion, in cash flows, then the story is no good. At the end of it, what you're investing for is that the company makes money and returns it to shareholders, and that is what should reflect in financials as well. So if you look at Deepak Nitrate's numbers, the phenolics business, which is the phenol business, and the plant achieved full utilization by FY 2021. They were fully ramped up in terms of phenol capacity, and they're still ramping up on that. So just to give you some perspective on that 2 lakh capacity, the company has added 1 lakh tons of more capacity on phenol by now, and they're actually investing further on this, and they actually plan to take the phenol capacity to 7 to 8 lakh tons in the next 3 to 4 years. So that's a big jump from this business not being existing earlier on. Right. However, to admit and in all honesty, what happened during this period of FY 18 to 20 is that while we were playing the phenol story, something beautiful happened in the company, which was a stroke of luck for us, to be honest. It was something that was not planned, was not part of the story, but turned out in our favor anyway. So if you remember, I'd spoken about these two chemicals, OBA and DASDA, which are brightening agents. China is a global leader in the supply of OBA and DASDA, and China controls most of the supply here. What was happening in China in 2017 was that the government was cracking down very heavily on all the factories for environmental clearances. So China was under this whole phase of controlling pollution, making sure that effluent treatment is happening properly, and the government was cracking down super hard on plants which are not following these norms properly. It resulted in a lot of plants, manufacturing plants in China getting shut at that time. About 80,000 manufacturing units shut within 2017-18 within China. Now, a majority of these DASDA plants also came under the scanner and they eventually shut down. Now, the only legitimate player outside of China with a decent capacity to cater for this demand-supply mismatch was Deepak Nitrate. Deepak Nitrate, of course, took advantage of that heavily. DASDA prices were skyroof at that point in time. They multiplied by a few times. And Deepak Nitrate went into the opportunity and started selling their DASDA globally. This resulted in DASDA, which was a loss-making unit in FY17, by FY20 it contributed to half the profit after tax for Deepak Nitrate. We actually got lucky. While we were playing the phenolic story, Deepak Nitrate had a second engine which was a surprise for us, and DASDA prices sort of shot up and took the profits even higher. And that's the financials you can see. Third step in the process is valuations. You might have a great story in hand. You might have a story that results in great earnings growth like we just witnessed. But what if the stock is too expensive? Right? If you remember, price equals EPS into P. If the P is too high and it has no scope for re-rating from there, the amount of target or the amount of returns you're going to get are hinged on to the earnings growth. However, the ideal situation is where both move. Now, both will move when? That's when we come to our initial discussion of when to invest. When the story is undiscovered, when the risk is high, when the market has not invested for that story, when the numbers have not played out, valuations are usually cheap. Right? Because the market is not valuing the company for what is about to happen, or it is valuing the company for what is about to happen, but with a very high risk premium. The stock price or the target price gets discounted for the amount of risk, and hence the multiple appears lower. So if we look at this story on a 1 year forward multiple, basically the stock was available for single digit multiples if you forecasted the numbers right. When you don't have earnings coming in, how do you forecast? And this is where financial modeling comes in, right? So what you simply do in this case is that you know that 2 lakh tons of capacity is going to get installed. What you do is, from management commentary, you will figure that when the plant is coming live, you assume a certain utilization level. Say it is 40% or 50% in the first year, it ramps up to 70% in third year, it goes to 90% in the next year after that. You also know what the phenol prices are. So what you can do is you can estimate what the revenue of the company will look like using these 3 things. What is the volume? What is the capacity utilization? What is the pricing? Using this, you'll be able to predict on a reasonable basis what the revenue will be, what the EBITDA margins will be, and what the PAT will be. Basis the future PAT and the current stock price, what is the forward multiple, 1 year forward or 2 year forward multiple that the stock is currently trading at? Right? If that appears cheap and you think that, hey, the stock should not really trade at 6 times, there is something wrong. If the PAT is actually doubling, right? It is 100% growth in PAT. The company is expanding very rapidly. The company should probably get a very high multiple compared to just 6 times. It should probably trade at 20 times, probably at 30 times, probably at 100 times, right? We'll not get into that because there is a much deeper discussion. It depends on several market conditions, depends on the industry, depends on the business, depends on several other things, right? But in a very simplistic manner, if you are saying that stock is growing at 100%, it definitely does not deserve 6 times. Right? You can look at peers, you can look at decent chemical companies with exposure in specialty chemicals, not just base chemicals, growing at very high rates. So the multiples at that point in time used to be about 25-30 times. Nowadays, it's come to about 55-60 times. Market conditions have changed. But at that time, you could reasonably say that, hey, I think the stock can trade at 25 times. So basically, what you're saying is that earnings will go double. Your valuation multiple will probably go 4x from there. And hence, the amount of money you can make can simply be calculated as, if the EPS doubles, what am I getting? If the multiple goes 4 times, what am I getting, and hence what is the stock price, right? Simple calculation can lead you to a place where you can reasonably estimate what you're playing the game for. So the stock price is 270. I think the stock price can go to $1,500 using these simple calculations, and that is the amount of money to be made. If the upside basis this valuation analysis comes to say 25-30%, you might want to allocate a certain percentage of your portfolio to this stock. That's where weighting comes into play. If you think that, hey, there is a 4x, 5x opportunity, I've got conviction, right? I've got high conviction that the story will play out, that the management is great or the character is good, the problem is big enough to solve, and the solution is legitimate enough or workable enough for it to benefit the company and hence the investor. If I have reasonable conviction, I can go higher in terms of the weight allocated to the stock. So I can probably start with 5%, 7%, or even 10% of my entire portfolio to Deepak Nitrate. As the story plays out, which brings us to triggers, which is the last part of the investment framework. Now, at the end of it, what happens is that you've got everything in place, right? Earnings are in place, valuation looks good. But if there is no trigger, your investment is going to lie dud for a very long time. So what we need to seek is that there is an active trigger in place which will trigger the earnings and or valuations to a higher orbit. And that trigger will play out soon. If it plays out after 2 years, what you're effectively doing is you're sitting on a flat investment for 2 years. You could have just looked at some other story which will play out sooner, parked your money there, and instead made money there and invested in this 2 years later, right? So there is an opportunity cost to parking money somewhere if the trigger is not playing out soon enough. In this case, what were the triggers? And hence, how could you strategize your investment accordingly? Trigger number 1 was that the plant actually became operational within a very short span of time. Plant became operational. You know that the management is taking this business seriously. They are ramping up. They're going aggressive. They've raised money. They've got land. They are ready. Right? Big trigger. Trigger number 2, capacity utilization goes to 40 or 50% within first year. That means there is demand for this product. That means these guys are able to sell. These guys are able to fulfill what the market needs and they're able to do so fast. Right? Trigger number 3, it goes to 70-80%. Right? Once it's in the numbers, which is FY21, 4,300 crores, it's in the PAT. PAT has gone to 57 times. Stock price is at 1860. Story has played out, right? At this point in time, if you make an investment, you are late, right? The stock has already gone 8 times from where it was. Earnings have gone up from 80 crores to 76 crores, which is almost 8 times. Valuation re-rating has happened. There is no juice left. You are late to the party, right? So what you want is that you play out or read triggers in the beginning and invest accordingly, and ride the entire wave or the story from the character which saw a problem all the way till the character solving the problem and becoming a hero. So the game you want to play is backing a capable character or a good company with strong leadership, good corporate governance, great capital allocation, and seeing them solve a large problem and becoming a hero. What makes for a blue chip in our mind, or what makes for a good company in our mind, is a company which does this repeatedly. So you've got one cycle of this, you go into another cycle and repeat the same story with the same capability and are able to deliver similar results. True that now the market knows that the hero is capable, so it's already trading at a higher multiple. So maybe the amount of money you could have made from FY18 to 21 is not the amount of money you will probably make from FY24 to 27. Right? Because there is already credibility behind the player. The market is betting already that ye to kar lega. So maybe that won't play out. However, they can repeat the same thing in terms of earnings. Right? So that brings me to, again, let's come to Deepak Nitrate in terms of what they're doing next. Right? So now there is another big leap that Deepak Nitrate is taking. What they're trying to do here is that they're investing in chemicals like PMMA and polycarbonates. Now, these are primarily used in electronics. They're used in EVs, semiconductors, all the new jazzy things. There is again a very large import substitution opportunity here. And Deepak Nitrate is going gung-ho on this and investing big. So, whether this story, now I've given you the story. What you can go back and do, and what I'm not allowed to do here, is give you projections in terms of what will happen when it comes to earnings of Deepak Nitrate in the future. What happens to valuations from here? Remember that valuations are already high because they've already gone from single digits to double digits. But valuations again depend on several things: market situation, industry dynamics, business mix itself. How sexy is the business that they're entering? Right? Where is phenol acetone used and where will polycarbonates be used? How critical will Deepak Nitrate be in a customer's value chain, and hence what value will it add, and hence what valuation will it get? So all of these things, again, simple framework. Look at the story. Story seems to be in place. Look at the earnings. Look at the valuation. Multiply the two. Look at what your target price comes to and strategize accordingly. As simple as that. So what we've seen here is a very simple story of Deepak Nitrate and how it plays out in terms of a good investment and a multi-bagger. What we do is we apply the same framework to multiple stocks every time we analyze them. And if anything doesn't look good, we drop the investment. Story अच्छी नहीं लग रही, छोड़ दो. There are multiple stories. There are 4,000 stocks plus available in the market. You can look at multiple stories. Earnings बैठ नहीं रहे, या डिलीवरी में प्रॉब्लम आ रहा है, या फिर it's not looking too great in terms of industry. If your story is delivering 12% earnings growth over the next 3 years, but the industry is doing 14, maybe not worth looking at. Valuation ठीक नहीं लग रहा, right? Stock is already too expensive or is factoring in too much, not great. या तो trigger ही नहीं है. Any of these factors come and drop. But if you find the perfect confluence of all of these four in place, then according to us, that makes for a good investment, and that's what we use for investing or making all investing decisions, whether it is in Rupeeting small cases or whether it is in the other company I manage, which is Paterson PMS, in terms of decision making there, or even my personal investments. And that's the framework we're using and giving to you. We'll keep talking about this framework repeatedly over a period of time, and I'll bring to you more such stories from the desk of Rupeeting. If you like our approach and if you wish to be a part of it, of course, you can head to rupeeting.smallcase.com. We're offering a special 20% discount to all our YouTube users. You can use the code YTFAM, YTFAM, and get a 20% discount on all our small cases for being special and for watching this video. Thank you for dropping by. Stay tuned for many more stories like this one. Keep investing. Thank you.